Hey, what's happening, neighbors? Austin here, and I am bringing all y'all out there on the mighty Beacon Lake the March 2021 stats. So our real estate market stats for last month, and let's hop right in. Last month there was one resale home closed, and there were 5 new construction homes that closed. And the one resale home, I was gonna say the average price, but it's the average, was $340,000. And the average of the 5 new construction homes was $395,000, so almost $400,000. The average days on market on that resale was 24 days, which is crazy to my ears right now. That sounds like a long time. It's really not, about 3 weeks. But yeah, we are seeing a lot of things go in the first 7 days, the first week or so, but not always the case. However, that house did do pretty well. It actually looks like it went just a little bit over the asking price. And so let's hop over to the stat that everyone really likes to talk about, and that is the price per foot. And this is one of the big reasons I like to separate out new construction and resale, especially right now. So for new construction, the average price per foot was $170 a foot. And for that one resale home that sold, so it's not a great sample size, but that one resale home that sold, it sold at $194.29, so $194 a foot. Now, just before you go running saying, oh, my 4,000 square foot house is worth $194 a foot, maybe not. That house was on the smaller side. It was 1,750 square feet. And typically when we have a smaller home, we have a bigger price per foot price. That looking at the new construction being at 170, you got to remember that a lot of these new builds, they actually went under contract at pricing back last year. So, maybe last summer, people went under contract, and we've seen a lot of price increases since then. If you're one of those people out there that went under contract last summer, good job. You've got a lot of equity already in your house by the time you close. But yeah, so the 170 is a little bit misleading. So why I really like to focus on resales as much as possible. And that 194, super healthy. If I had to guess, 2,500-ish square foot house, I'd probably be in the 185 to 195 range, depending on a lot of different things. Outdoor living is getting a ton of money right now. And if you guys have a pool, holy cow, pools are getting so much value. It's incredible. Of course, they're very difficult to get scheduled to build right now. So, all right, that is the stats. And I sometimes like to answer questions that I receive. And one question that I have received, or something that's been pointed out to me a couple times, and again, it always seems like I'm going back to people freaked out about 2006 through 2008. And this one is on cash out refis. There's some articles came out, and they claimed that 2020 had more cash out refis that 2020 had the most cash out refis that we've seen since the crash. And guess what? That is absolutely true. But I want to show you why that's not cause for, for hysteria. All right, so I'm gonna shrink myself down here really quick, and let's take a look at these, some of these numbers here right now. So looking here at 2006, there was $321 billion taken out. So that was in the 2 years leading up to the 2 years before the bubble burst in 2008. There was a lot of money. The homes were treated like ATMs. A lot of money coming out of the homes. You see in 2007, very high as well. And so strictly speaking, yes, look at this. We are seeing the most cash out refis that we have since the crash being here. But that's not the whole story. That's not the whole picture. So let's hop over this way and take a look at this here. So tappable equity, just think about this. If you take the value of a home and then take 80% of that, because we don't want to assume we're tapping into the whole thing. So if your house is worth $100,000, let's call it $80,000. So we'll take that amount minus the loan already on the house, and that's how much equity people have to tap into their house. And you see in 2006, it was like maybe just under $5 trillion available. And we zip on over up here, we've got $7.5 trillion available in money that people could cash out of their homes. And then finally, these charts here, I think, help understand the big picture. See, like we just said, 2006, there was $4.6 trillion available. Now there's 7.3. So that 360 versus 150 or whatever those two numbers were in cash being taken out in each year, $1 billion, is you start to see the full picture here. It's not as severe as it would sound. And so out of all the loans that were taken out in each of these years, in 2006, almost 90% of the refis were cash out refis, versus last year in 2020, only 33% were cash out refis. And so because back in 2006-7, it wasn't like people were chasing the interest rates down, trying to get better value on their payments, better value for their long-term money. Right now, that is what's happening. We saw in 2018, we almost hit 5%, and there's been a pretty steady decline down since then. So of course, a lot of people have been refinancing, and we really saw that when things, last summer, all my lender friends were super busy with refis. Underwriting was super backed up, but people were just getting the most value in their long-term money as they could. And so if we're looking at the percentage of tappable equity available, 2006, 7% was tapped out, and we're only seeing 2% now. So again, always trying to look at the bigger story, the bigger picture. A lot of times news articles are out there to shock and to scare us, versus just giving us information and giving us the whole story. Anyways, hope that was helpful. Looking forward to seeing you guys around the neighborhood. See you next month.